Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, we're struggling to find the words to describe the scale of the global economic disaster enveloping the world. And yet, equity markets are up today and relatively buoyant. In the US, the number of new unemployment claims rose 4.4 million last week, taking the total past 26 million in 5 weeks. At the start of March, they had an employed workforce of 156 million, with 7.1 million already unemployed. Just 6 weeks later, 20% of their workforce is now jobless. And things are worse than that. Not only have many people had jobs and hours cut and reduced pay, states are still struggling to process unemployment claims, so many more are actually newly jobless but not counted. We're witnessing a vast social disaster here. In response, Congress has enacted a further $500 billion in fiscal relief, but undermining that, the Republican leader of the Senate declared that states that run out of funds should just declare bankruptcy. Just how hard the American economy has been hit can be judged by the April flash PMIs released overnight. Their services PMI crashed to its lowest on record. Its factory PMIs fell very hard as well. Neither sector shows any optimism about the immediate future in coming months. All this trouble compounds the US federal debt problems. New analysis shows that the Trump fiscal irresponsibility plus the pandemic mitigation funding will push federal debt levels to a larger share of GDP than during the Second World War. Things aren't any better in the EU, with an unprecedented collapse in their April flash PMIs as well. Their PMI index sunk to under 15, sucked lower by the French one, which was just above 10. The worst PMI report is from Japan, where their April PMI index is under 10. And the Bank of Japan is preparing to go nuclear with unlimited bond buying. And China is also under increasing pressure to add to its already considerable stimulus. One plan is to relax car buying rules there. In Australia, they've also had an astonishing drop in the service sector in April, according to the market CBA PMI. Company shutdowns and restrictions due to the pandemic response have resulted in severe declines in both business activity and new orders. After a positive start, the S&P 500 gains today are being whittled away, with that index up now only 0.5%. Overnight, EU markets booked modest rises, while yesterday most Asian markets were flat. The US Treasury 10-year yield has slipped 2 basis points to be just on 0.61%. Gold is higher again today, up another $8 to $1,723 an ounce. And US oil prices have risen again today. They're currently at just on $17 a barrel. That's up $3 since this time yesterday. International oil prices are rising too, with the Brent benchmark up another $2 to $22 a barrel. And the Kiwi dollar has risen as well overnight. We're now back over 60 US cents at 0.75% up from yesterday. On the cross rates, we're firm at 94.3 Australian cents, and against the euro, we're much firmer at 55.8 euro cents. That means our trade-weighted index is back to 66.4 and at a level it was at the start of the week, and that's our 4-week average. And we'll be back again with you on Tuesday after our Anzac Day holiday weekend, and then we'll be at level 3. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.